Welcome to In It to Win It. This is Steve Barton, and thank you for tuning in. We're here for Monday Market Moves, what happened last week in the markets, and what I expect for next week. Alrighty, let's go to the charts. Starting out as always with the S&P 500. So tapped on new all-time highs on Friday, and then actually Thursday and Friday, and then came back down, forming a bearish reversal bar here. So my bias is to the downside for next week. It was up 1.3%, but my bias is to the downside. Next level of support is going to be 5,300 right here at the 20-day moving average. And then after that, the 50 around 5,200. Dow Jones Industrial Average is up 0.3%. Bearish reversal bar on Friday, probably going down. And the Qs, basically think of this as technology, and that one hit another all-time high on Thursday and Friday. Very similar chart to the S&P 500 because this makes up a lot of it. The dollar on Friday shot up. For the week, it's up 0.3%, a third of 1%. So keep this in mind when we look at the commodities and what they did on Friday. They pretty much did the opposite of this. As the dollar gets stronger, it takes fewer of those dollars to buy the same commodity. Canada Central Bank lowered their interest rates, which probably made this go up. And the yield curve inversion, the 10s minus the 2s, we are still in upside down clown world here. Short duration debt is paying more than long duration debt. Once we cross this zero line, we should be headed into the recession. But you can take advantage of that with 1-month treasuries paying 5.36%, still north of 5. Gold is down 0.16% for the week. Shot down on Friday, so this is pretty exciting. Closed the week at, what is that, 23.25. And liking this a lot. So we got support right here at 2,300. I would like to see gold kind of settle down, get a little bit sold off. Maybe we can get some of these miners a little bit cheaper. Yeah, next level support is going to be around, we'll call it 2,250. And the gold divided by the S&P 500 ratio. And basically what we're waiting on here is we want to see a reversion to, let me get that out of the way. There we go. We think that gold is going to get more expensive in relation to the S&P 500, not dirt cheap like it is now. So if we even get a reversion to like 1-to-1, that might be an interesting time to make that trade. And this is gold divided by GDX. And what I like about this, Rick talked about this at the end of our last show. I'll put a link up here so you guys can check that one out if you missed it. He said we're in a real sweet spot now for the gold miners. And so this is gold divided by GDX, by the ETF of gold miners. And we can see since 2006, this thing has gradually been going up, which means the metal is outperforming the miners. But there's moments in time, like take this one right here, where the miners, whenever this chart goes down, the miners are outperforming gold. They outperform by over 50%. And he thinks we're approaching a similar moment now. So if that's true, then this chart will continue to go down just like it has been since February. And we're going to want to be in the miners over the metal itself. So if you were like me and you started buying CEF and other funds like PHYS and OUNZ and PSLV, if you're buying these physical, air quotes, physical funds, then you may be able to trade some of this and get into GDX or maybe some of these other major miners. All right, GDX is down 5% for the week. Any level of support that I see is still going to be around $32. I think that might be a neat limit order, maybe $32.50. And then after that, around this 200 moving average, around 30. GDXJ, same kind of thing, down 7% for the week. As far as support, we got that right here, right around 40 bucks, and then probably a stink bid down here around the 200 of $37 or so. Franco, Nevada, opportunity is knocking. Okay, this is getting sold off with gold here. So we had limit orders in, I think, for 121. Okay, so that one hit. Now your next level of support is going to be down around here, maybe like 115 or so. I don't know if that 100 moving average will do much on this, but I would be looking for a lot of the price action right in here, which is around 115. Maybe you get lucky and even get it down around like 112. Wheat and precious metals down 4.5% for the week. Formed a quick little double bottom here in the daily. You can see happened on Tuesday there, up and then back down. I'm not sure that I'd be buying here, but if I didn't have any position, I'd like a limit order around 50 bucks. Metalla Royalty down 5.6% for the week, just hovering right around that 200 moving average. The 200 moving average is sloping down though, so would like to see that kind of gradually come up, and then that might create a nice entry point. Anthony wrote in, last week I liquidated my Metalla Royalty at $3.30. Good job, sir. And bought GROY at $1.50. So here's GROY. I did as well, got it at 150 and then 151. So I think we asked Rick about this one. He thought it was pretty fairly priced. As far as the copper asset, it should get paid off in about 5 years, but according to Rick, that asset's probably going to last 25 or 30. So imagine paying off a loan for 5 years and then you have gravy for the next 20 or 25. And that's basically the bet that Gold Royalty placed. So like that one a lot, I bought more. And Origin Royalties down 8% for the week. Rick also mentioned that this one has just looked like a hockey stick, kind of parabolic. According to Adrian Day, this one's worth about $1.20 a share and it's only trading at 89. So if you want to short the Merlin deposits, take out a put on this. Not that they're available, but yeah, I don't know. I'm in this one at least till you know, I'm excited about this deposit, and I think this one's going to do really well. And let's see, Lori says, with the potential stock market drop coming soon, why do you continue holding gold and silver stocks? Aren't you worried that you're going to lose all your money? Shouldn't we wait until after the general stock market drops? Well, you could. Let me go up here to gold. Basically, it becomes, I've been getting the same question here, Lori, since back here when gold had a triple bottom at 1615. So the point comes, I think if a recession hits, that gold is going to get hit. But when does that recession come? Does it come, I don't know, 5 months from now when gold's at 2,700 and it knocks gold down to where we are now at 23? Or does it come tomorrow and we take $2,300 gold and knock it down to 2,000? I don't know. So I basically just buy this stuff on pullbacks, accepting that if a recession comes, it's going to get whacked. And that kind of goes into what Pitch says. He says, sounds like you're preparing for a recession. Views on when? No, I think this year. But basically, I just added this up for the month of, for last month. I got 20% cash. So if a recession comes, 1 out of every $5 I can fire and buy some more of these stocks. If it doesn't happen, then that 20% cash is paying me 5% a year in the form of treasuries. So, you know, maybe don't make as much, but it's a lot safer too. And on top of that, as far as the gold position, I've got 24%, and about 1/5 of that is in physical gold. So the way I look at these, especially like CEF here, is this is cash. It's volatile cash, but it's cash stored in the form of physical precious metals sitting in a warehouse. So you can take moments in time of this and trim your cash position, or your gold or silver, the physical ones, to put on a leverage bet on the miners, which is kind of what Rick is saying. Okay, hope that helps. And Barrick Gold, I put this little circle in here because it got pretty exciting. So we could see that the price action just dipped right on the 200 there and blew through a bearish reversal bar to the downside. Some really nice back support right back here. But technicals are looking like it's going to go down. If gold gets hit, this will get hit even more. So if you had the limit order in for, I think it was 1625, that hit. Next one is going to be around 1525, and then a stink bid down here around 14 bucks. And Newmont is down, what is that? 3.7%. Oh, you know what? I forgot about Barrick Gold. We had a a glitch in the matrix where there was a hiccup and it traded at 50 cents for a hot minute, along with Berkshire Hathaway and Chipotle. But if your limit order, I know a lot of you guys had limit orders in here for 16.25. If it hit and all of a sudden you found out that you bought Barrick at 25 or 50 cents or something, don't fret. Your brokerage firm will take that away from you. And because something happened, the error happened in your favor, not theirs. So they're going to take that back. So don't worry about that. Newmont. All right. Newmont is down 3.7%. Our limit order. Let's see. What did we have? A limit order for 38, I believe, is what we're saying. Yeah, that didn't hit, down around 40. There is an okay amount of support right there, but if gold gets hit, like I think it will, we're going to get this down around like 38 bucks. I like that level a lot. Lines up right with the 200 moving average. And Agnico Eagle down 6.5%. Look at that selling on Friday, 7% just for that day. But 6.5% for the week. We got support right around here, around 60 bucks, maybe 59 where that gap is. So that might be a limit order and then a stink bid down here around 55. G Mining Ventures down 10%. We bought it back here at 155, closed the week at 139. If we were psychic, would have just waited for that. Decent amount of support right here. I threw in a limit order stink bid down here around $1.25 because this is pretty leveraged to gold. So if this gets hit, if gold gets hit, I think we're going to hit this one. So excited for that. Rio 2 down 6% for the week. Cup and handle ironed out, shot up, and now we're just consolidating. They still got to build some more cash, and hopefully they'll start construction September of this year, which would be awesome. I like this one a lot, and I think it'll do really, really well. Silver is down 4% for the week. Closed the week at 29.44. Like this a lot. It's looking like it's putting in a bear flag right here. So I don't like that it closed below 30. That's a bummer. However, I think we got quite a bit of support here around 28.50 or so. I would be a little surprised if it gets below that. If it does, then the next level of support is going to be back down our old friend 26, but I don't think we'll get there. I think we're probably going to trade in this bearish flag here. I'm sorry, bull flag, this bull flag here for a little while until we break out. And this is gold divided by silver. The ratio now is 70, we'll call it 79, 78.97, close enough for government work. Shot back up. Depending on what you hold, if you hold more gold or silver, if you hold more silver, you want to see this thing go down. If you hold more gold, you want it to go up. Alrighty, and SILJ is down 8% for the week, so very leveraged bet to silver. Next level of support on this is going to be around $10 and we'll call it 75 cents, somewhere around there. Pan American Silver is down 10% for the week. This cup and handle also ironed out, shot up. Now we're consolidating down here. But, you know, if you don't have any position in this, I would say once silver gets down to like 28.50, this will probably knock it down quite a bit and you can snag some Pan American. Like this one a lot. And First Majestic coming into a double bottom right here. So if I'm wrong and silver happens to go up next week, then this would be a pretty good leverage bet to that. You don't even need to run options on this thing because it's so volatile. I mean, look at the difference just from if we just tap that to that, 25%, right? So quick little move, cold following, like this one for leverage on silver. Silvercrest dropped down, what is that, 11% for the week. So big ones, we're getting into the junior ones here, or the leveraged ones here. So they go down quite a bit more. Looks like the chart's starting to break down. Probably going to get some consolidation here. Maybe it'll get picked up by one of these moving averages. And Endeavor Silver is down 8% for the week. Looks like it's putting in a little bit of a kind of flat line here. See, just holding above this little gap, although most of these gaps do get filled, so I would expect that one to get filled. Next level of support is probably down around here that I feel comfortable with, and that's like $3.10. And copper, paging Dr. Copper, down 3% for the week. Chart is finally starting to consolidate. Maybe this is the recession coming in. Next real level of support is going to be around $4.25. We're only a quarter away from there. And COPX is down 5.7% for the week, although it is hitting on some back support right back here. If you don't have any position in copper, and let's say you want to bet, $100, maybe place 10 now, right? There's some decent support right around where it is right now. Maybe place a $10 on this, or 10% of whatever your allocation is going to be here on COPX. That might be your first one. Second one, maybe place 20% down here around 41. And then hopefully as this comes down, then we'll have more entry points. But doesn't look terrible right now for a first like 10% entry point. And COPJ, kind of the same thing. I'd prefer to get it down here around 21. But this one sold off this week down 6%, so a little bit more than COPX, and that makes sense because these are juniors. But I like this 21 support quite a bit on COPJ, and yeah, just lining back up right here. So I like that one a lot. Arizona Metals down 13% for the week. But look at this gradual trend line up. This is good. We got a change in management here. Guys that have done this before, they're probably going to do it again. I think we just grind a little sideways. See, it's just kind of obeying this 50 moving average right here. Hopefully it holds right there and then on the way up. But I would say, buys around this white line are pretty good, getting it around the 200 moving average. And Tony wants to know about Gladiator Metals. As soon as I pulled up this chart before I pressed record, I'm like, wow, this company's probably worth 12 million. And we go to the financials. No, it's worth 14. Okay, so a fair amount of this is actually open to the to retail, but this is basically exploration at its finest. So they're diluting shares. They're at the time where they're going to have to do that. So I'm not going to be a whole lot of help here, Tony, other than if it were me and I knew about this company and believed in it and wanted to bet on it, I would just be lining back up here, and I'd probably place my first limit order here around 25 cents, and then maybe another one down here around 20, and then where it IPO'd back here a couple years ago, a stink bid around 10 cents or so. But look at how volatile this is. Just yesterday, there was probably one guy buying here, and just look at this price action, a difference of 50%. All right, uranium. We're having Justin Hune back on the show next week, so make sure you go to the community tab and submit your questions for Justin Hune there. Pretty excited about that. We haven't had him on in a while, and uranium is kind of in this little trending pattern here like he predicted. So yeah, excited to see what he says. Uranium is down slightly for the week, down a couple percent, I think. What was it? 2.7% for the week, which drove down Sprott Physical Uranium Trust. I made another purchase on this. Thank you, Joe, for the email. I got it at 19 bucks, closed the week at 18.62, so a massive discount. So when uranium itself was only down by 2.7%, SRUUF was down, how much was it for the week? It was 9.6% for the week. So pretty incredible, getting a discount again. Did go through this 200 moving average. I tend not to pay as much attention to these technical charts, but it did hit on some back support back here and there and there. So I'm pretty much just trading the discount on this one. When it gets north of 11%, I buy. And then when it gets closer to net asset value, I sell. And Yellowcake out of London, support is probably going to be right around here, like 575 might be good for a limit order. If you already had one in there, it hit on Thursday, just for a hot minute. Not sure if it filled. And Cameco, down 3.8% for the week. Do I see any patterns here? Not really, just our standard typical support around, what is that, 50 bucks or so, kind of maybe hitting on that 50 moving average. And Kazatomprom, nice little sweet spot, drove the circle here check out where it's hitting, right on the 200 moving average. They just paid a dividend, so they got to pay it somehow. It comes out of the shares, and they pay that dividend, and bam, right there on the 200 moving average. This thing has been pretty reliable once, twice. Hopefully this is the third time. If not, then I like a limit order down here still for 38.50. But if you want some Kazatomprom and you don't have any yet, I think now is a pretty good time. URA. Oh, Peter says, I'm in URA and Cameco and don't know if I should go out and take my profit. Well, if you're in there and profitable, you've probably been buying back here and now you're debating what to do. I really like Rick's thing, you know, sell past the point of concern. Basically, if you know you get back your initial investment, you pay the taxes, pay yourself a little bit more, and let the rest ride. I think we still got some room to run on uranium, and I think we have room to run for a few years. Doesn't mean I'm not taking profits, you know, and I already have. I'm in the trade now for free. And if you're up on these things and up a decent amount, which you probably are, you could do the same thing. I tell you what, you sleep a lot better at night. Hope that helps. And let's see, URA is down 7%. It blew through the $31 support. So next support is kind of where we are now. And the one after that, I would say would be down around here, like maybe 29 bucks, just lining up with this 200 moving average. So what you could do, Peter, is maybe just put a sell limit order up here for 33 bucks for a position where you would be essentially on the house money, and do the same thing with Cameco, maybe kind of where it is now, and maybe 55 or 56 bucks, and then let it ride, you know? I think I'm going to do the same with URNM. I'm going to sell another, it was either 10 or 12% of the position. I can't remember. I got a limited order for sell up here at 59. We'll see if it hits. I think it will. I don't know when. But as far as URNM, we're down 8% for the week. Blew through 55 support, so that's no longer there. I still really like limit orders for this thing around 50 bucks, and I think we'll get there with all these bearish reversal bars this week with the dollar getting so strong. I think we might get there. You know, limit order 50, $49, something like that. URNJ also down 11% for the week. I didn't think I'd be getting any more of this stuff, but I threw in a limit order for $25.50 and it got darn near there. Darn near, but didn't quite hit. So we'll see. Nothing real scientific, just lining up with back support and this rising 200-day moving average. This is URNJ divided by URNM, which is why I'm betting URNM now and not URNJ. Why I'm betting URNJ now and not URNM is because it's been outperforming and we're at a kind of a cheap spot right now. And I think we're likely to get a bounce. Uranium Royalty Corporation down 10% for the week. Our limit order for what did I say last week, $2.50, blew through that. Next level of support is going to be just down slightly, maybe like $2.30, somewhere around that range. I like that one for a limit order. And some people watch the Qs, we watch the Us, hitting right here in a Fibonacci, although with this bearish reversal bar down. If uranium actually comes back up next week, what we're going to want to see is we're going to want to see a double bottom. We want to see this kind of come up and then go down and then up. And that's your bet point right there. Okay. Uranium Energy Corporation down 15% for the week. But I drew a little circle here on Thursday. Oh, whoops, what am I doing here? Undo, and that. There we go. Now we're on the pointer. Okay, blew through the 200-day moving average. So this chart is at risk of breaking down. You know, if uranium gets hit, this is going to get slaughtered, just like it did. Yeah, next real level of support is going to be down here around $5. But we'll see if the $6 level holds or not. It is coming up on a double bottom right here, but with this bearish action on Friday, let's see what it looks like on the 30-minute. Yeah, that's not looking good. It's probably going to go down. Okay, but anyways, maybe, you know, if you don't have any, maybe a buy now and then another limit order around $5.50 and then $5. Denison Mines, we sold out of this and bought into Nestle. So far, that's working out. Denison Mines is down 13% for the week. we're out of this position. I'll probably have egg on my face 6 months from now. Time will tell. And boss, I'm actually thinking about getting out of this after Rick's comments on it. But I did put the circle here. If you want more boss and you really believe in this company, we are hitting on a lot of technical support right where it is now. So if I was really interested in this company, I would have bought on Thursday, but kind of anywhere around where we are now. I set a limit sell order here for $3.90. I may end up pulling that. I don't know, but just a thought. And crude oil is down 2% for the week. It's kind of at risk of breaking down. See how we had this sharp sell-off right here? This could be a bear flag, actually, now that I see it, but blew through the Fibonacci, so I can take this out. And did hit back support back here around $73, but this could continue going down. I thought the floor was maybe 65, but I talked to my buddy Eric, who's been in the oil business his entire life, grew up with his dad doing the same thing, and he says no, the cost is probably more like 50 is probably your floor. So we could have quite a bit more downside in oil, which I would love to see in the short term, because then XLE, which is down 3.5% for the week, looking like we're going to get a hit here on the second bet. 88.65, the one after that 86.25, and the one after that 79.75. So these are the percentage of dividends you'll get as this stock gets cheaper, assuming that, you know, they follow about the same dividend payouts for this ETF. But yeah, I like this one a lot. I think the next buy limit will be right down here, right on the 200 moving average, around that price point of like $88, $89. And ExxonMobil is down 4% for the week. Kind of coming into this retracement here. Like I did a limit order for $1.10. I didn't put it in there, but there's also another one for $1.09. This will be your dividend if you get it at if you get it at 110. So not $1.10. Yeah, the best oil company on the planet, second best oil company on the planet, Chevron, and I like this chart a lot more. Okay, we're hitting right in this retracement right here, right on the 200 moving average. Let me get some of this out of your way. There you go. Bearish reversal bar on Friday, but just kind of anywhere around this 200 moving average I think is great. You know, limit order for 155, something like that, and this thing pays 4% dividends. Blackstone Minerals is down 1.4%, but I think any limit orders here around like $15.60, somewhere around there, it'll probably hit. Freehold Royalties. We asked Rick about this one as well. He likes it a lot. And look, we've been talking about 1350 limit orders for a while. It hit again on Tuesday. So congratulations, you're in Freehold. Collect 9 cents a month for your dividend. But I still think limit orders 1350, stink bids down here around 1275. And Woodside Energy just not complying, down 3% for the week. Kind of coming into a double bottom here. Rick still hasn't done work on this company, but we can see that we've got it's hitting right in a retracement right here. So right in between the 50 and 61.8. If you want some Woodside, I think now's a decent entry point. And Petrobras, this one is down 6.5% for the week. Had the $14.50 limit order hit. The ex-dividend date here is coming out next week. So if you want to get that 34-cent dividend, what price? What's that going to be at? I think it was like 2 1/3% just on that one dividend, something like that. But anyways, like this one, high risk, Brazil, but really high reward as well. Natural gas is up 13% for the week, and we have this possible trading vehicle for natural gas right here. This one was up 9% for the week, so pretty close correlation. So if you want to bet on natural gas futures, this is one way that you could do it. Maybe a limit order down here around $8.20, something like that. Devon Energy down 4.5%. Is anything up this week? Down 4.5%, kind of around this 200 moving average, hitting right in a Fibonacci. Made one more purchase here. What is that? 46.27 is what we got it at. Now, if it does textbook come down, double bottom, back up, that would be another entry point. They got their dividend, ex-dividend date is going to be June 14th, so next week. And Equitable down 1.25%. We got support at basically 39, right around this 200 moving average. We have a golden cross right now. So if you're not in Equitable and you want to be, I like a limit order right down there around 39. And Paula says, how about KMI? Okay, so Kinder Morgan is a pipeline for natural gas. I can see why you like it, because when we go to the dividends here, 5.37%, my concern is they might not be sustainable, okay? But some pretty killer dividends. I get that. As far as, are they diluting any? Let's see. Okay, they're buying back shares. Okay, that's good. Slowly, but they're buying them back. Okay, now as far as an entry point here, no, I don't see one. As a matter of fact, it's probably close to reversing. Okay, so look at how stretched all the technicals here are on the weekly. Look at how stretched they are on the daily. And actually, this looks like it might get cheaper here. So I think you're in luck, Paula. If you believe in this company and you want to continue on, I would have limit orders down here around 19 bucks. And then maybe down here around 18. And then some stink bids kind of down here around 17 or so. So maybe stagger in like that as it goes down by more. And coal. Thermal coal closed the week at 133. Met coal closed the week at 251. And our favorite coal ETF that Matt Warder helped put together made our final purchases in this. Might get one more actually if it gets kind of cheap. But shot up, and then we just waited for a pullback, and we got in here at 24.25 and I think 25.50, something like that. Or no, I'm sorry, 24.46 and then 24.25. Okay. But like this one a lot. I think coal is coming out of the shoulder season, and I think this is a real easy beta way for us retail to play it. The assets under management are up another 200,000 this week, up to 9.6 mil. So looking fantastic for this vehicle. Glencore still looking great, way in the black here. Just buying when they were doing that tech deal that everyone hated because you knew the dividends were going to get hit, and they did. But in the next year or so, those should start to tick up. AMR down 2.6% for the week. Someone wrote in, AUM wrote in and said, what do you think? And I said, well, if you don't have any, I think there's probably an 80% chance this thing hits $300. And I think it actually, if you zoom in on this, I think it got down to like 304 cents or something. So I don't know that it quite hit 300, but basically kind of where it is now. I think kind of around this 200 moving average. I already got quite a bit of AMR. I want more. My limit orders are for 290. I think the odds of that hitting are probably 40%. So I may actually move this up to 300 and just hope to capture it. But we're coming out of shoulder season, so this should be on its way up here shortly. Warrior Met Coal dropped out of the sky on Tuesday, hit right on the 50 moving average. Matt Warder said he might need to adjust his laser eyes up to about $60. So right back down here would be the laser eyes entry point. But I think if you just want a position getting in on this 50 moving average is probably fine. That's around 65 bucks. And Peabody BTU down 4.5%. So shot up, shot back down, closed our option a little soon. We could have got it back here, but hindsight's 2020. I could see straight looking backwards. As far as entry points on this, I don't know. I think this was our shot right here. I don't know that it's going to get much cheaper than that. ARLP. Okay, we asked Rick about this one as well. He doesn't own it, but one thing I can't help but notice as a technical trader is this cup and handle pattern. We have the retracement here. So broke 38 slightly. We do not want to see it break 50, but we're screaming up here. I think if we get a pullback down here to the to this 38% retracement, that would be an amazing entry point. I don't think it'll happen, but I do remember one of the listeners, I can't remember who, was asking for like 2 weeks right around here. They're like, ARLP, anyone? ARLP, amazing dividends. It's getting cheap. I think we have a double bottom. So nice catch. Well done. You're up quite a bit. What percentage is that? 33%. Not bad. Not bad at all. Yeah, I don't see any entry points on this. I'd want to wait for at least a minimum pullback here to like the 200 moving average. And platinum. Very excited about this one. Oh, Eager Beaver says, I'm really paying attention to your downward sloping trend line on platinum. So he's talking about this white line here. Let me zoom out to the weekly. There we go. Like Gareth Soloway says, a break above and confirm for the following day above trend line is a great buy on retrace to the scene of the crime. Well, I feel a little bit better about this trend line if Gareth Soloway also drew it. But yeah, I think we're going to need to get above this and have some price action before we finally break out. But as far as platinum, it is down 7% for the week. It blew through the $1,000 support we're talking about. Closed the week at 971. I think the next level of support is going to be around 935, right around here. And the way to play this is the PPLT, still like $85 limit orders and then stink bids at 80 bucks. Platinum divided by gold, still historically cheap, 0.41. Okay, so it takes 0.41 ounces of gold to buy 1 ounce of platinum. I fully expect this is going to reverse 1-to-1, possibly even 2-to-1. And the way to play palladium, palladium is down it's up 2% for the week. And we have support, which is pretty exciting. We have support right down here. I think like stink bid orders are going to be around like 850, maybe 860. But if you want to play palladium, it is getting cheaper by the second. We had a limit order for 85. I think we mentioned last week that hit. I think your next stink bid is going to be around 80, maybe $75. Easiest way to play that, and the way I'm playing it, SPPP, you get both platinum and palladium in one trust coming into a buy point here, right? $9.50, lining up back here with that back support. So if you don't have any of this and you want to play the PGM market, I think now is a pretty good time. I put in another limit order here for $9. All righty, and nickel. Nickel, this one is kind of exciting. Okay, so let me zoom out on this and you can see nickel going back to, what year is that? 2006, volatile. And then since 2016, it's just had this general trend line up. We have an anomaly right here from COVID and from the war. As soon as Russia invaded Ukraine, that's what happened to nickel. And then since then, they've been selling a lot of nickel, which has driven the price down. Also on top of that, we have a giant nickel miner in Indonesia that is rapidly destroying the ocean around that property by the minute. And so I think nickel is going to get cheaper. If this comes back down to this trend line, which I think it will, NIKL should line up pretty well with these bets at 1325 and 1260 as a stink bid. The NIKL ETF is down 7% for the week. And I think it'll keep going. I don't think this 50 moving average is going to do anything. I think it's going to blow right through that, and hopefully it does. Another way to leverage on this is Centaurus Metals. I've asked Rick about this one in the past, down 8% for the week, but shot up today, almost 10% today. And this is a very leveraged play in Brazil on nickel and the PGMs. And this circle right here is going to be kind of my buy point, I think. I think I'm going to be looking at this around 25 cents, maybe 20 cents, and a stink bid around 15. I got a question today, I think on Twitter, of where to buy this. I said Interactive Brokers, and then I tried to buy it on Interactive Brokers, and it wouldn't let me. So I looked on Schwab, and it looks like Schwab allows it, but they charge you 50 bucks for every transaction. So keep that in mind. And iron ore down at $108. BHP kind of hitting in this Fibonacci right here. I think anything down around here, around 57.50 would be a deal. Rio Tinto is down 3% for the week. Again, hitting right in a little miniature double bottom right here on the 50% retracement. So that's something to note, but I like, we got the 100, the 400, and the 200 upward sloping moving average right here. I like this as a level of support for quite a bit. It's right in between this retracement, and that would be around $67. So if you don't have any and you want some Rio Tinto, that might be a neat limit order. Maybe it gets even cheaper. And cocoa futures are up 7%. Coffee futures are up 1% for the week. No, that's not right. What is it? Is it? Oh yeah, 1.19% for the week. Yeah. Okay, so they're both still pretty high, which is where we did the Nestle bet from Adrian Day. Thank you very much, sir. Made 10% so far. Hitting right on this 200 moving average. That's not a coincidence. Traders like myself, look at that, like a hawk. Almost took my position off and just was happy with the 10%. And then I got to thinking about it. The reason I did this was because cocoa and coffee are historically high right now. And when that reverses, Nestle's probably going to benefit. So I kept the bet on. Awakening wants to know, he says, thoughts on Hersey like Nestle. Okay, so compare and contrast. Nestle's worth about 7 times what Hersey is. They're both buying back shares, so that's good. So they're reducing their share count. Hersey's dividend is a little better. So if you want to play this for the futures market, I just simply did it because Adrian recommended it, and for whatever reason he has Nestle instead of Hersey. But if you want to play that same one here, maybe this is even a long-term hold. This is kind of compelling right here where it is technically. The 200 moving average just scooped underneath it. It is slightly downward sloping, which isn't good. But look at all these strong moving averages. You got the 50, the 200, and the 100 right underneath it. Kind of a compelling entry point here. Run a retracement right there. Yeah, kind of anywhere in this range, I think, 195 or something like that. If you want Hersey, that's where I would be getting it. And Bitcoin broke through the bull flag. It's trading right now at 69,000. I thought the halving would have done a little bit more to this, but so far nothing. But all righty, well, I hope you guys got something out of that. Support the show. There's a link in the notes below, and I hope to see you at the Rules Symposium in Boca Raton, July 7th through 11th. There's also a live stream for half the cost where you can enjoy it in the comfort of your own home. I hope to see you there. If you come to the live event, I'll be in room 180. Stop by and say hi. Thank you for tuning in. Support the show and share this with anyone that you think needs to hear it. It's probably your buddy that can't stop talking about tech stocks. You have yourself a great rest of the day, and we will talk to you next time.